Okay, we made a new tool here. It's called Portfolio Builder, and you'll see all about it in just a few minutes. I think you'll like it. All right, in the beginning, okay? Now, you have several viable or even great strategies. But now you'd like to know, what is the total performance of combining some or all of them into an overall portfolio? And then you'd like to figure out, how much money do we allocate to each of these? Because that's probably as important or more important than the individual strategies. And the next thing you'd like to know is, how often do we rebalance the funds between these strategies? Or do we at all? And then there's the perplexing question, how do we know when the strategy is not working? Now, I've been working on this off and on for over 10 years. Started with Gene and the VectorVest guys, and we always wanted to try to figure out when a strategy wasn't working, and tried a number of things, and none of them worked, and so I quit for a while. And then 5 years ago, we actually came out with this Gizmo tool, which didn't do all of this, but it did combine various strategies together and answered some of these, but it didn't have rebalancing. It didn't have what do you do when the strategy's not working, and some of the other things. And then in the last year and a half, listening to all these presentations on momentum, Klenos, Logical Invest, there's a bunch of them. It came pretty clear that momentum works, which I guess we all kind of inherently knew. But I got the light bulb went on and says, well, it's fine and dandy to have a strategy where the strategy itself depends on momentum. Like you're looking at a strategy of picking the 5 highest momentum stocks. Fine, that works fine. But how about we use the momentum approach on the strategy's equity curve? So that's what we're going to do, and it really does work pretty well. Now, some other things. With the Gizmo, you couldn't input your own equity curves. You had to wait on me, which I didn't want to do all the time, so I just did it every 6 months. So you can input your own equity curves derived from your strategies. You can choose your own allocation scheme, and you'll see several that are built in. Run and determine if and how often you want to rebalance. Choose a time period for your analysis. This loads up a bunch of data, and then you can zoom in on various time periods and see what the returns would have been. And Gizmo did that as well. And then I've added an auto-rotate allocate strategy. And what this one will do is, if you have enabled a number of strategies, it will pick the best of them on a chosen rotation period and tell you what percentage of the funds should be allocated based on the rank. And then if you want, you can combine that auto-allocate and rotating strategy with other strategies. And then the result is a total portfolio result that combines all this stuff. Now, this might sound awful complicated, but it's really not. Especially if you might have to play with it a little bit to get the hang of it. But if you've ever used a Gizmo, you're halfway there. Okay, and now we've got lots of statistical measures and graphs like we had in the Gizmo. There's an output that you can use to transfer the equity curve to our Monte Carlo analyzer or one of the 2 equity curve analyzers, which gives you even more graphs and stuff. And then you'll see there's a rotational report showing which strategies are chosen over time. Now, what do you need? Well, it's developed on Excel 2010, the 32-bit version. It might run on 2007. It probably won't work on 2003. I probably can't help you if you got a problem on 2007 and 2003. I don't know if it'll work on the 64-bit version of Excel. That one has problems with some macro commands. So it may or it may not. And I don't know if it'll run on 2013 or 2016. You can try.
2016 here.
Oh, are we? Okay, so it probably does. I guess it does. Question.
Is this VBA 7 and above that you did this on?
The question was, is this VBA 7? I don't know. It's whatever's in Excel 2010.
I think it's VBA 7. The reason I ask is I converted a file from 32 to 64 just yesterday, and it's pretty easy if it's on VBA 7 and above.
Yeah, well, there's, even with VBA 7, there are certain commands that the 64 in VBA,
Right.
that the 64-bit version will barf on.
Right.
That's why I've never upgraded. I just don't want to mess with it. Okay, before you start, as we always do with my spreadsheets, if there's a cell that has a yellow background, you can change it. Don't change any other ones. If you do, you might screw the spreadsheet up.
Tell them to save the version copy.
That's what, so his point is down to bullet number 3 here. What I would recommend you do is, when you get it, make a virgin copy and then work from your copies. That's why if you mess something up, the original's still there. And you'll see other reasons why you might want to save copies as well. Now, the calculation mode is on manual for a number of reasons. So as you make changes into the spreadsheet, nothing's going to happen except the cell you changed. So you won't see it update on a real-time basis. So you have to push the update portfolio button. Then you'll see the effects, and then you may want to change some more. So, and lastly, read the help sheet. I tried to do a pretty decent job, and if you still have problems, then send me an email. All right, this is a partial view, and you can see it resembles the old gizmo. Got ranges to evaluate, what's loaded. We've got our strategies that you've loaded up here. Now, what we're going to go through, there's really 2 levels in this one. There's this total portfolio level up here, and there's things you can do in it. And then down here, there's the auto rotate and allocate strategy, and we're going to go through those separate. Now, the output if you're using this one, it all goes up here. A couple things, I'm going to cover this again. This section right here, and you probably can't see it, but you can see it when you get the tool if you want it. For each one of these that you have loaded, it will tell you what the CAR, max drawdown, Calmer ratio, annualized volatility, and the Sharpe ratio is of them by themselves, in case you forgot.
Is that one of your equity curves that you enter, or?
That comes, the question is that the equity curves that you entered, and the answer is yes. These are from the equity curves that you entered. And by the way, if you change the time wing or time period, these will all change.
You don't have to hit the update key when you do a date change, is that what you're saying?
What was the question again, Serge?
Do you have to do the update key after you make a change, or does it automatically change?
When I've typed in this number right here, let's say I make this 1103, that cell will change, and then I have to hit the update curve.
That's why
Did you hide the normal toolbar or code or?
It's the toolbar?
Yeah.
This is a screenshot. I
I
cut.
know. I mean, is the normal toolbar visible or?
Yes.
Okay.
You can turn it off.
Okay.
All right, so up here you got these. You enable them by clicking on these boxes. There's lines here. If you're using it, it'll turn green. If there's no data, it'll say no data on that line. And then up here, at the total portfolio level, you have a couple different ways to allocate the funds. Just like in the gizmo, you got the gizmo and the user defined. And I don't remember if I have slides on that. So if you use equalize and you pick 5, then it's going to give them all 5, 1/5. If you
The weight of the money that you're gonna.
the weight of the money. If you pick user defined, then you have to go in this yellow line and type in what percentage of the funds you want to allocate.
So if you don't do that, what does the default do?
With user defined,
No, if you don't do user defined, what goes in?
well, then you want to click this to change this box to equalized.
So just equal weight.
Then it's equal weight.
Yeah.
Will error out if you don't have?
Yeah, I think so. Well, the question was, will it error out if you don't have that? And I think so.
Can't see anything.
But you'll get it. What you'll get is you'll probably get is a really strange answer down in this section here where there's portfolio results. Like you might get 0. You'll know something is wrong. Now there's an addition to this one. Here's your rebalance capability.
So what, the block below that one, what's all in the block right below where you're currently?
This here?
No, the one on the left.
Here?
No, left.
Bottom left.
There you go.
Here?
The one you were pointing to just a second ago.
Yeah, this is the allocate where you, I'm sorry, this is where you choose how often you want to rebalance.
Yeah, but the next block below that, the big block.
This one?
That block,
Yes.
You didn't explain.
Well, this one here is the total portfolio results.
Oh, okay.
And it's got all your statistics,
Data drawdown.
the car, the max drawdown, some other stuff, a whole bunch of stuff. And it's a good point. Well, let me come back to that. So anyway, to rebalance, the frequency that you rebalance has to be in months. Okay, if you put 0 in there, it's never going to rebalance. Okay, never. So you could rebalance every month, 3, 6, 9, 12, whatever. And then at this level up here, the funds get rebalanced on that frequency. Now to help out here, once you set it up, you'll see, you input your starting value right here. Portfolio starting value. And then what this will do, based on how you have selected the allocations and percentages and whatever, this line right here will tell you what the starting dollar amount was to each strategy. Okay, and then the next line will tell you what the ending is, and the last line will tell you what the ending strategy percent is. Now, if you put in 0 here and never rebalance, and you run for 16 years like this one, what you'll find at the end is the really good strategies might be 80% of the portfolio, and even though you started out with only 20. So that's one of the reasons you want to learn probably to rebalance. So at the end, you'll see what it was if you rebalance. Now the rebalancing always occurs at the end of the month. You can't change it.
But you can choose how many months you want to rebalance.
Yeah, 1, 2, 3. If you put 1.5 in there, it probably will crap out.
Do you want to make any comment on the rebalancing time period? I mean, I've read several studies where it doesn't matter that much, and so.
It depends a lot on the strategies you have,
Right.
You
And
can test it yourself.
and you can test it yourself.
You can see which one works better.
Because for some strategies, you want to rebalance a lot.
Yeah,
maybe every month. For others, you might be able to go 3, 4, 5, 6 months, or even a year. Okay?
But it's a global.
Yeah, it's a global. You can't well,
You can't
to rebalance, you have to have at least 2.
What I'm saying is that when you rebalance quarterly, it affects all strategies. There's no way to say selectively certain strategies.
Well, yes, that's correct. But there's a way to handle that if you wish, we can talk about later. I'm gonna mention this again, but while I think about it, it's a good time now. So you do need to use some reasonable caution, and by that I mean, you might have, you don't want to mix your funds. Okay, so you might have strategies in 5 brokerage accounts, and if you go in here to the rebalance, can you really rebalance from this account to that account? In a lot of cases, you can't. If you have a brokerage account and an IRA, you can't move funds from the IRA to the brokerage. Not easily, and not without penalties usually. So you gotta use a little common sense. But there's some ways to partly,
So you can actually add money at a particular month value?
no, you can't add any into here. I mean, you can put it in your strategy and have it included in the equity curve.
So the individual strategy, you could, like, say, put a monthly contribution. Is that what you're saying?
Yeah, and then make sure that's included in your equity curve.
Okay, so, but that's continuous. In other words, you're putting $100 each month, every month it's $100.
Then it should show up in your equity curve.
You generate an equity curve.
There's no place to put it in here.
Oh, okay, so it's not gonna show up in the numbers, it's gonna show up in the equity curve. Okay.
Yes. Okay, so we'll play with this on the real machine in just a little bit, but so let's go through a little more how you do this. Okay, so input your strategy equity curve data. This assumes that you have an equity curve. All right, if you're flying by the seat of your pants, you don't have one, so this probably isn't going to do you any good. And this doesn't care where it comes from. Okay, the data must be in the format like this. Dates, equity. And
Like the city, you're just saying you can have it earliest date first or earliest date.
that's correct. It can be earliest date first or not. You can have missing dates, like one of Dan's, the Sleeping Beauty, if you remember that. It trades maybe only every month or 2 sometimes, and then it might fire a couple times in a month. And it only is in there for a couple days, and the equity curve he gets out from TradeStation or whatever has a whole bunch of missing dates. That's okay. I don't have any problem with that. Just enter what you have, and this one will fill all those dates in with a constant equity value that was the last value.
But each strategy has its own set of data.
The question was, each data has its own set of dates and equity. So you don't have to match them up. One of them can start at 1/1/2000 and another one at 6/15/04 and another one at 8/1/2010.
No, I'm sorry, what I was asking was, let's say you have strategy A, B, and C. There's an equity file for each one of those, correct?
Yes, that's correct. There's an equity file for A, B, and C.
Okay.
Equity file or just data in the.
Date and, well, this is an equity file right here. Date and an equity value.
Which you'll have to copy and paste.
You'll have to paste it in there. Okay, now, when you think about this, and I'm going to do some of this myself, this can actually be, if it's an individual instrument, you could input the dates and the equity for SPY, for ExxonMobil, for 5 mutual funds, and see what happens. It doesn't care where you got it, as long as there's dates and equity.
And you can mix and match both ascending and descending.
Yeah, I'll fix it.
You can just restore it.
I don't want you to have to ascend or sort it before you input it. So you input it, and the program sorts it as it wants. If you have an equity curve you can generate from a trade log, you could put that in there. It really doesn't care, okay? Now, I recommend that you give each strategy a brief name and fill out whatever of these descriptive fields that you may wish to put in there so you know becomes meaningful to you. You'll see some examples of that after a bit. Oh, now while I'm after thinking about this, there's a little tool being written, almost done, that will convert from some of the programs that output equity curves that aren't in this format, and they're not super simple in some cases to do. So right now it'll do Portfolio Visualizer and Sector Surfer, and there's a couple others I've already got in there, and if
I'll send
you send me the
I'll send you
VectorVest, that's a
Vectorvest.
kind of a nasty one too.
I'll send it to you.
And then you run that tool and it'll generate this appropriate file. If you don't want to use it, that's fine. It wasn't very easy to make. Okay, now, when you input, there's a page to do this. And you will clear the data you no longer need. There's two methods. The first one, if you hit that one, they're all gone. Okay? Then there's another one that's clear selected inputs, where this is what it looks like. So if you hit this button, all this data goes kaput, including these descriptions. Okay, so you can't undo it because this is done with a macro, and you can't undo macro.
You don't have a second thing that says, do you really want to do this?
No, I didn't do that. You do it one time and have to reconstruct it, and you probably will never do it again.
Or you just make a copy of it.
Or save it before you clear it. Then if you clear it and said, oops, just close the workbook without saving and open it again. Okay, so this doesn't show up. Yeah, there we go. These are all only enter in the yellow cells. If you want to clear just certain inputs, you just put a 1 in this cell to clear that strategy. And then it clears this, but it doesn't clear this. All right, and that was recommended by Dan because next month he might want to update it. And he doesn't want to have to retype that in there, but he doesn't want to put new data in. So when you get to your data input, you hit the load button, and it loads Portfolio Builder and switches back over to the other, to this sheet.
By loading, what do you mean it loads? Where does it go get the data?
It doesn't go get, it takes the data, it takes the data from here and puts it on another sheet where it's actually used.
So we're cutting and pasting our data into each one of these columns?
That's correct.
Okay.
You would take this file and you would copy it. Now, I don't need this header,
Okay.
okay? And if you look and see the header's already there, so you copy this all the way down as much as you need,
Do you need any certain format at all?
and you paste it in here.
Okay.
Yes,
Do you need a certain date format or a
Yes.
certain?
Yes?
Go back one sheet.
Well,
Now, if you were.
let's put it this way. I need a simple Excel date format, and if it says 12-31-999, it probably works as long as the number in that cell is the Excel date format number, 428746 or whatever, and not just the format. Now, there are problems like Sector Surfer is a little different, and Portfolio Visualizer is really different. Okay, it doesn't have an Excel number in there. And VectorVest is different too.
Yeah.
So it doesn't just have well, it does in a way. That's not neither here nor there.
Do you have to have the leading zeros like you've got 01, 03, does that?
No, you don't need that.
All right.
Because it can just be the Excel number for all I care. But that doesn't mean much to you.
Excel actually converts the numbers to integer format, 32, I think.
Not always.
It's serialized. But
Yeah.
my question is that if you just got the 12/31/99, for all future calculations, it's just gonna use the 50,000.
I'm not sure I follow you, just hold on a little bit. Okay, so,
And the dollar format is 2 decimal points, or?
no, you don't need, it can be none. In fact, later on in the other spreadsheet, I don't truncate them, but I round them off and I don't show cents. We don't care about cents. Okay, so then it'll take you right back to here and you can start setting this stuff up. Now you need to know more, okay? I recommend that this right up here in this yellow cell here, put a name in there for what this is. You don't have to, but later on when you see the graphs, it puts that name of that in the graphs. And when you see what Dan and Jeff have done, if you don't put stuff in there after a while, you're going to confuse yourself. Okay, like I say, you may wish to save the file in a similar name. Then you select the strategies by using the drop-down boxes. Set the time period by those two. We're going to have more. Choose the allocation method, equalized or user-defined. If you go on user-defined, you can go on margin. If see this box right here? It sums up what you've entered. So if you wanted to put some total for these strategies up to 200%, you can, and then you'll essentially be on margin. You won't get a margin call. I'm sorry, I can't do that, but you will see what happens. So you can. In equalized, you can't go on margin. It's just always straight through. Okay, so we've done that.
Let me ask one other question.
Okay.
When you put in your, one of the things you said is you can't equalize like between your 401k and your regular account. So let's say you have $100,000 account, but right now you're only investing $50,000 in that so that you can balance back and forth. So do you put in $100,000 for that account, or do you put in 50, or how does your sheet work?
Now, wait a minute.
Which would be best?
Well, let's say you have a brokerage account and an IRA and you can't mix them.
But you want to be able to rebalance.
Do different strategies. What you would do is you'd have if you wanted to, brokerage, auto rotate and allocate. You might set that up for your brokerage and give it a name. And you'll generate an equity curve, brokerage, whatever. And then you do the same thing on another spreadsheet for your IRA and call that IRA account. Then you would come up to here and you would enter you'd have to probably go to 0. No rebalance.
On the IRA.
On both.
Well,
Because you can't mix between the funds.
But what I'm saying is, do you put in your invested amount or your total?
A percentage.
Total amount, including cash that you have in there?
Total amount. Well, I mean, that's up to you.
But your equity curves would be smaller because it would include the cash and the equity.
Yeah, well,
Oh, I'm just saying.
I mean,
So Tom, this will generate a new equity curve of the portfolio?
yes,
And then you can use that to feed that back in?
yes.
Okay,
You can pyramid with this thing and you'll see what these guys have done.
okay.
And all I'm saying is, I can't make this totally universal, I don't, without spending an awful lot of time. So be careful when you get to running the thing that you're not mixing funds that you can't really mix. I can't prevent you from that. So on this upper level we're looking at now, there's no rotation between strategies, but there is rebalancing. Now there's the auto-rotate strategy down below, and just be aware that allocations on this level do not affect those in the auto-rotate strategy. And also on this level, the auto-rotate allocate strategy results are treated as a separate strategy and can be combined with others. The auto-rotate strategy is always number one. Can't change it. And if you run it and develop a strategy, the equity curve you generated becomes the equity curve for strategy one. You will find you can't input to strategy one. If you don't want to use that, just set that to no. So that means, for example, you could have a strategy where it's in stocks, and you're looking at some fairly aggressive stuff, and you're using this auto-rotate allocate, but you want to put 30% in a bond, TLT or something else, or a high-yield bond strategy. Well, you input that equity curve to this, and you assign that, you go into user-defined, and you assign that to some number. We put the rest of it in over here in the auto-rotate.
Rotate, that's just, means you rotate between one,
No, well, you're going to see in a minute.
uh,
Okay, another little
Just
tip.
put a zero, you could rotate, just put a zero allocation to something. Can you change your allocation percentages over this, or are they fixed for the whole time?
They're fixed. Well, at this top level, this level, they're fixed.
What is that level? I'm sure I understand what you're.
The total portfolio level. The
Okay.
things you see above, right up here.
Okay,
Well, if you say 30% on a particular strategy, it's still consistent to that strategy, is that correct?
It's 30%, depends on what you have on the rebalance.
Right, it'll rebalance it, whatever your.
Back to 30%.
Right. And then if you say equivalent, it's gonna be, you have 5 strategies out there, it's 20% for each. Is that
That's correct.
And then it rebalances whenever the interval.
If you have something other than zero.
Right.
Oh, okay. Now, if you wish to see the equity curve and all the other stuff that's down below for only one strategy, then just select that one strategy and make sure, well, it actually doesn't matter what the allocation is in that case. But I'd recommend to make things easy to set it to 100%. In other words, let's say I wanted to, well, you'll probably use this a lot when you're playing with the auto-rotate and allocate strategy and developing it, then you won't see any results unless you set that to yes. And while you're playing with that, I would recommend you set all the others to no. Otherwise, all these numbers over here will not only include the auto-rotate and allocate, but it'll include any of these others that have been selected to yes. I got some blanks. Either you totally understand what I said or you're
well, I
confused.
understand your auto rotate and allocate. What do
We
you-
hadn't talked about.
I haven't talked about that yet.
All right, okay.
Okay, so let's say you're just doing stocks, to make it easy instead of the whole strategy. So you got 3 stocks, so that would be in 2, 3, 4, 5 that you can turn on, and you have the portfolio curve for those. And then you wanna rotate the amount of money between those is which equity curve is better.
Oh, that comes next.
That's the, I'm just trying to get to a point. So that's the allocation part that's coming up.
Yeah, so think of the auto rotate is an equity curve switcher.
Right, well, I was just trying to simplify what we're,
But
what you're
you gotta
thinking.
keep, that's what that one is, it's equity curve switcher.
So if you just want to look at the equity curves, you turn one off and then look at the rest of them. And then
No, you turn them all off, but the one you look at, you want to look at.
Okay. Got it.
All right, this is just a note. I've tried, I'm not gonna spend any more time. Occasionally, there is a logarithm chart in here. And I've turned off the alerts, but for some reason, every once in a while, this window pops up. Just click OK. It doesn't affect anything, so don't worry about it if it crops up. Now, you also need to know that there's a cash account. Strategy 29 is a cash account, and you cannot change that either. It's set to earn 0.5% APR, which you can't change, excuse me, either. Now, you can select it and use it at either of these two levels as a viable strategy if you choose. Not sure why, but you might. But the primary usage it uses for is if the user-defined allocation is less than 100%, back on that line we were looking at, the remainder goes to the cash account. It'll automatically assign it. And in the auto-rotate and allocate strategy, it's automatically used if there are not enough strategies to fill the desired number of positions. So let's say you put 5 in that. Well, you'll see this. This will be more important in a minute. So if you want to use 5, but only 3 strategies are enabled, you'll get some errors, but it'll run and it'll put cash in the other 2. Or sometimes it'll happen if there's not enough data at the rotation time period because some of the strategies don't start until later. Then it'll put those positions in cash. And then what happens, there's an option in here to use positive momentum only. And if you're using 5 positions and only have 3 strategies that have positive momentum, the other 2 slots get filled with the cash account. Does that make sense? All right, now a little bit about date ranges. The capacity is from 12/31/98 to 1/2/20, 21 years. And you can input anything in that range. We talked about this, we talked about this. Now, up at the top after it's loaded, this will tell you what the range is that's loaded. And you make your selections on these 2 yellow boxes. So you could evaluate the whole range. You could say, oh, I'd like to see what happens from, let's say, the 1st of 2008 through the June of 2009, right through the nasty bear market. So you put those 2 in there and you run it, and you see what happens. Okay, now you need to know how the available date range is determined. The first date loaded, which is what we see right up here, will be the one that allows at least 2 strategies to have data from that point on. So you can load all these various different start dates, but the first date that shows up there is going to be where there's at least 2. The last date loaded will be the last date for which there are at least 2 strategies still have data. The idea is we're allocating and rotating and using more than one strategy, and it's kind of pointless to do that if there's only one strategy. Okay, so that's how that was determined. So Portfolio Builder then loads the data. Those strategies that start earlier than, or later than that first date that you put in, basically have value loaded back in time from the first available date from that strategy. And then the last available value is extended to the end date. In other words, let's say you input a strategy that starts at 1106, but all the rest of them are starting earlier, and you started that strategy with $10,000, then it puts $10,000 all the way back to the beginning, so it can work. And then if you stop, there's no more data after 12/31/15, but the rest of them have data beyond, takes the last data point that's on there, let's say it was 100,000, and puts 100,000 in every one of those. That way we don't get any divide by zero errors or anything else. Now what that's going to do is you may see flat spots in the equity curves depending on how you have it set up. The other thing is it's going to do is when you have long periods of flatness, since we're looking at a momentum rotation strategy down below, those won't get picked because they'll be zero, which is probably what you want.
So equity curves like produced out of any curve, you can make it where every day has a value, and it just may not be changing because nothing's happening, right?
Yes,
So is that okay? Can you
Yes.
accept this?
yes, that's fine.
Okay.
In fact, that's what I'm going to do, like with Dan's Sleeping Beauty.
Uh-huh.
All those days between when it doesn't have data,
Right,
it just extends the last data point for every day.
right. So if you're at 100,000, we'll keep 100,000 until.
That's correct.
Okay.
Now, in order
This
to,
is only, I'm sorry, this is, what you're getting to hear is only for ones that only stick out a trade every once in a while, whenever it happens and it doesn't fill data in between. That's what you're having to do that for.
yes,
Correct, okay.
plus, if you enter monthly data, it's going to fill in all the days.
Okay, this is a lot, this makes it easier for us if we don't.
That's correct.
Okay. Thank you.
And also, if there are missing dates in your data, I'm going to fill them in.
Okay.
Now, this is important too. There's 1 year of data from the first trade in order for this auto-rotate strategy to work, because we're using momentum. Momentum means I'm looking back in time. Okay?
Can you vary the time?
So I have to have data there to look back.
Is it always 1 year, or can you change it?
No, you cannot change it.
So it's always,
No, you can, if you want it, when you run the strategy, you can look back 1 month or 3 months or 6 months or 128 days, you'll see. But you can't start the dead points, change the dead point. The first 1 year data always, you can't use it. I mean, because it's used for a look back period.
why couldn't you just,
Because I don't want to do that, Jim. And the reason is it's too complicated for people.
okay,
So which ones do you want to look back? And which ones don't you? So now I got to put a whole bunch more controls in there that, in my opinion, add zero value. If you're looking back, here's my point. If you have an equity curve that's 2 years long and you want to auto-rotate it, you don't have enough data to begin with. So if you've got 15 years or 10 years, so what if I cut 1 year off of the front?
no, it doesn't matter.
The only time it would matter is if your starting date of that equity curve is 1108. And then I would say, you better go find a way to get data back a little further.
When you're doing ROC and moving averages, it's not that hard to just, if you've got this EMA or this ROC, you need so many days of data before the first time you calculate it.
Well, you can, but I chose not to do it. Okay, so let's go back. So, up here, you've got this overall range, but for each strategy that you've loaded with data, you've got these dates up here for when the auto-rotate data is valid, and you'll see I put them down below too. So you just got to be a little careful. And sometimes whatever you put in there, if you're running, just remember anything prior to the date at which the strategy has valid data on your equity curve, either that strategy won't be used, or you could get some strange problems. So be a little careful.
What, allocate that money into cash?
Yeah, and I'll allocate the money to that strategy, and the change will be 0, 0, 0. It won't put it to cash. It'll just put it's working off the daily change, so daily change is 0, 0, 0, 0, 0. Okay. Now I want to fire the machine up. No, wait, let's wait. I'm gonna keep going. Let's speed this up a little bit. All right, now we're gonna go into the auto-rotate allocate strategy. And the idea of this one is that it'll get you out of or reduce fund allocations to poorer performing strategies and get you into or increase fund allocation to the better performing strategies. And it's going to give you a report that I found it helpful that shows how strategies and allocations are rotated over time. Now, and you'll see it a tip at the end, if you have 3 strategies and you're going to hold 3 positions, it works. It works better if you have more strategies than you have positions. And the reason I say that, okay, is every strategy is going to quit eventually. Some quit and never come back. Some quit for a while and then start working again. So I really believe it. You don't have to do this, but if you want 5 positions, I think you ought to have 7, 8, 9, 10 different strategies to choose from, and you'll see what happens. But that way, when one quits, it'll go to one that started working. Either that, or what you need to do is make sure you have positive momentum box checked. Then it'll just go to cash, and after time you'll look and see the cash account is being used a lot. Okay. Another point I'll make again, but this isn't going to make crappy strategies do well. You need to have reasonable ones. It's your decision on what's a reasonable one, but it won't make a really crappy one do well.
In other words, if they're all not performing like it happened, like in 08, you should just be out. Is that what you're saying?
Yeah, if all of yours are not performing. When you see here, I've been surprised, and you'll see some of these guys, if they show them, with this rotation, they brought it right through 08, no problem. If you have enough strategies.
So then if they quit working and you have positive momentum, your cash account will just start building up when they quit.
That's correct. Or it'll switch to a different strategy.
Right.
All right, so we're going to go. I wish we had 2 monitors, but we don't. So in the auto rotation allocation strategy, now we're down in this area. It says auto rotate and allocate strategy number 1. Oh, that's a good point. Another reason for you to put in names of your strategies is so you can figure out, well, the main reason is so you can figure out what it's doing. All I don't use those internally. See these numbers up here? I use the strategy number. I don't care what you put in there. It's just a number. So auto rotate and allocate is number 1. Okay, so we're going to start doing it, and we want that one turned on, turn the rest of them off. Okay, so, you'll see in a minute, but you select the strategies to be included in that strategy by entering a 1 on row 51 for those to be included and a 0 for those to not be included. Available strategies have a yellow background. If there's no data, it'll have a reddish background. Row 49 gives the first valid date, and row 50 the last date for which there was a change. So, okay, so here's a zoom in on that. Strategies to include, it repeats the names, first valid auto-rotate date, last data available. To help with this, after you hit, after you enter it gives you a little table that tells you the earliest date for the strategies that you have enabled and the number of positions you have selected to ensure that all positions are ranked and filled within 1 month from the beginning of the test, providing there are no flat periods lasting longer. So it kind of helps you a little bit. If I pick 3, then my start date in this case would be 12/31/99.
Now, can you explain, you said position and then you say strategy. What's a position and what's a strategy?
A strategy
I know
is,
what strategy is, but-
okay, it's a set of data with dates and equity. A position is a chunk of money that's allocated,
Oh, okay.
a bucket. All right, so you'll see in a minute. Choose the number of positions you want to use. You can go from 1 to 5. You can choose the allocation weights. We'll talk more about that. There's ways to decide how you want to answer or how you want to allocate your funds. That's down in row F29 in a table. Choose the ranking formula you want to use. And there's a number, and you'll see, you put that in J26. Choose the rotation period in months in cell N26. And there'll be more of this, but the rotation always occurs at the end of the month. And the look back period is in months for the ROC and the linear regression slope function. You can only use months for those. There's a Klenow function in there, which you can use days. And there'll be more of this in a minute. There's an option to use volatility. And if you enable that with a 1, then it'll include volatility in the equation.
Do it like Clinton's book, just multiply it.
I'll show you in a minute.
Okay.
But it only applies to the ROC and the linear regression slope because Klenow already has a volatility component.
Is that volatility, is that a monthly component?
In the momentum.
Okay.
Is it a monthly? Well, you'll see. Use only positive momentum. That's the dual momentum approach. You can choose to do that. And you'll find sometimes it makes a difference and sometimes it doesn't. Or if you want to be careful for the future, you just use it. Press the update portfolio and iterate as you see fit. Now let's look at the weighting. First of all, we select the strategies based for their position number, based upon their rank. Then it assigns dollars to the strategy based upon the weighting approach. And we use that until the next rotation period ends. I give you 3 approaches. There's equal, assigns each position an equal amount of funds. So if you have 5 and use the equal, every position gets 20%. If you only have 3, each position gets 33%. This is one progressive that I came up with where, based on what money managers, what you should do, in my opinion, if you're doing a momentum approach, is give position number 1 the biggest amount, rank number 2 something less, and I chose half, or about half, Number 3, about half as much as number 2, et cetera, down to number 5.
Can you put those volatility ranking, inverse volatility ranking function in there that he has in the book?
I don't think so, but just wait. Okay, so the idea is, if you got a good strategy, you need to put money into it. Okay, and this will automatically change that.
You have to put money into it, but you have to watch the risk too.
Well, yeah, but it'll calculate that.
Okay.
Okay, then you have user defined. So if you don't like equal and you don't like my progressive, you can put your own numbers in.
But you can't vary it from month to month.
No, well,
Go figure.
no, you cannot vary, well, yes, it'll vary by itself. I mean, you can't say I want number 1 to have 70% this month and next month I want number 1 to only have 50. No, you can't do that.
So you can't, there's no dynamic position sizing or anything like that?
No, there's not, except one month ABC is number 1, it gets 70%. Next month it falls to number 3, it switches to 20%. But the number 1 position always gets the same amount, even though the strategy that fills that bucket is going to change.
Sounds like it wouldn't be that hard to put those volatility ranking in there if you had access to the code.
I'm not sure I want to, but I could look at that. Okay, then we have to choose the auto rotation period. And that's how often the composition and ranking is evaluated for changes. Now, this is important, okay? I try to make this as realistic as possible. The rotation process always occurs at the end of the month. You can't change it. We could try doing that, but in my opinion, you're curve fitting.
So, in the example you gave, 70% of the number 1 strategy, once it goes down to 3, it will sell 40% of that, is that correct?
It will assume you are selling it,
Okay.
or mixing,
With the end date, the end of the month,
yes.
and transaction date, the end of the month.
No, transaction doesn't occur at the end of the month. The evaluation occurs at the end of the month. That's the day we don't have data till then.
Right.
So at the end of the month, after the close, we have all this data and we can look at our ranking again, calculate all our numbers.
Okay,
It's
so-
too late to trade.
No, what I'm saying is that if your primary, your first strategy is $100 in February, at the end of January, at the end of February, it's $80. So when it takes the 40% off, okay, it's gonna use the $80 figure to take you out of it, is that correct?
Yes.
Okay, that's all I'm trying to get at.
Okay, now, there's a 1-day delay before the new allocations are effective. Okay, so evaluation's done after the close. Now I've got my numbers. The next day, I'm going to make my changes. I'm switch money around, buy things, sell things. Okay, but the old ones are still the ones that are going to affect the equity curve on that day.
Yeah. I had to do that.
I'm assuming that you don't get them done until the close. Okay?
And you're using.
And then the new allocations taking effect on the second trading day of the new month. If you don't do it this way, you are fooling yourself.
I put decision delay in all my code so that you can vary the day. And sometimes you can vary it more than just 1 or 2 days and get better performance.
Yeah, you could, but I want to make this fairly simple. Okay, and you can screw around. Well, with Sector Surfer, you can go plus and minus. I think you're just nuts doing that. And the other reason I did it this way, because if you're doing mutual funds, most of them don't pay the dividend until shareholder of record at the end of the month.
Tom, it's trivial to put a variable delay, and I don't know that you can do it. It's trivial.
I know, but I don't want to. I want to make this simple for people to use, and so they can make it have realistic results without having to have any more knobs that are already there.
Well, like in Smith's thing where he does bonds, we need 2 days for sure, and then because bond pricing doesn't come out early enough to make earlier.
You have, that's what I'm saying, you have to be
So you're
careful.
including dividends in here, is that?
Absolutely.
Okay, so if you got.
Well, no,
No.
if you put them in your curve, they're in there.
Okay, that's why, okay.
My point is, if you sell a mutual fund on the last day of the month, you may not be the shareholder of record anymore, and you won't get the dividend. Now, it all depends on the mutual funds and all that, and some mutual funds prorate the dividend, so if you hold it for 29 days out of 30, you get 29 out of 30. Some of them don't, but I can tell you the ETFs don't prorate. So if you're looking at ETFs looking for a dividend, you better not sell that stock or whatever before the dividend goes on record, or you won't get your dividend. So that's how this works. Now, ranking. Each of the selected strategies you've chosen is ranked by the ranking formula chosen. The strategies are ranked from the highest value to the lowest. Highest value gets position number 1, second gets number 2, etc. All right, here's a simplified version of how we do it. The ROC, simple ROC, the value at the end minus the value X look-back periods minus 1, that actually gives you a percentage change, which is what we want. We are looking at relative momentum here. So we got to have a percentage. So using a percentage normalizes those strategies. On the linear regression slope, we use the Excel formula for a linear regression slope, but then we divide that number by the current value of the strategy, so we normalize it. If we don't, a linear regression slope on, say, the Dow at 27,000 is going to be far bigger than one on the SPY, which is at 200. And it'll always pick that one, even though the slope, you may not want it. So if we divide it,
If you use a performance curve, you get around that.
this is simple, Jim. Okay, so then there's the Clino, and that is a little more detailed, so I didn't put it all in here, but it uses the 2 look-back periods, and they're also used for the volatility portion of the Clino formula. Now, some people like to use the Clino formula with just 1 look-back period. If you want to do that, you just make look-back 1 equals look-back 2. Look-back periods. ROC and linear regression slope, it's the number of months. It's the last trading day of the month X months ago. So we're looking at the end of this month to the last trading day X months ago. That means if you're using 3 months, sometimes it's 61 days, sometimes it's 65, usually it's 63. So,
You use calendar days, is what you're saying.
no, I use trading days.
You do it in months, how do you do that? Why would you use
Oh.
numbers?
I use the date.
And you got the trading days between, all right, okay.
Well, on the Clino, I look back to trading days, because that's what I have. Okay, now these are not used in Clino, because that use trading days, regardless of when they fall. So if I look back, let's say I'm on May 30th, and I'm looking back 3 months on the ROC and LinReg slope, I'd look at, February 28th. If I'm using Clino, I'm going to look back, let's say 63 days for 3 months. Now, I don't know when that's going to fall, but it falls where it does. They're not that sensitive to these. Okay, in Clino, there's 2 periods, one for each of the 2 factors. Each look-back period is used to calculate a slope multiplied by the R squared. Again, the volatility, essentially in Clino, he multiplies by the volatility. And then you add the 2 together equally, 50-50, to get the final number. And again, these particular periods, they don't used in the others. Now, if you want to use volatility, in the ROC and WinReg slope, what it does is it adds the standard deviation of the daily change to those formulas. It calculates them for the same look-back period as you've already chosen for the price look-back, and then we divide the ROC or linear reg slope result by volatility. That has the net effect as if you have 2 strategies, each have a number calculated up here of 2, but one has a volatility of 1 and the other has a volatility of 4, then if I divide them, 2 divided by 4 is a half, and the other one is 2, so the 2 one wins. So this essentially, if you will, is going to penalize the momentum calculation for the really highly volatility equity curves.
He uses that for his position sizing and how he allocates funds.
And then maybe I'm kind of doing some of this.
You're not doing it like he said.
I'm
I
not,
understand you.
I had no intent to do position allocation like Clino does.
All right, okay.
I'll do it the other way. And you can try it, and I bet you it doesn't make much difference.
No, he does the sensitivity analysis in his book, and he, in his last chapters, he says that's one of the most important things he does.
Yeah. Okay, so this tends to make lower volatility strategies rank higher. It can, sometimes it reduces the max drawdown and smooths the equity curves. Other times it doesn't make any difference. Or sometimes it actually gets worse. Then there's the option to use only positive momentum, like the dual momentum theory. If this is enabled, no strategy will be selected for a position if its rank formula value is less than 0. And again, as I said, if there are not enough strategies to fill the selected number of positions, then the cash strategy is used for those positions.
So in the dual, you've got 3 strategies, because that's with the dual, well, that's the more popular version of the dual strategy. It compares all 3 in terms of its relative, and it picks the highest. Okay, usually 12 months, that's with the, that predict. If none of them, it just goes to the cash account, is that right?
That's correct. Okay, so this is what it looks like. And here's the box. This is blown up. So here's the box where you select the number of positions. Here's where you select your weighting, 1, 2, or 3. And then there's tables down here that says what those are. We'll look at it when we pull up the spreadsheet. Here's where you select the rank formula, 1, 2, 3. Here's where the rotation period goes in. Here's where the look-back period goes in for ROC and linear regression. Here's where you enter that.
Look back 1 and look back 2? Yeah, there it is.
That's for Clino.
Right.
You enter a 0 if you want to use the volatility, and a 0 here, or a 1 here. You enter a 1 if you want to use volatility for ROC and linear regression, or a 1 here if you want to use only positive momentum.
The days is all trading days.
Yes.
Now, can you, are you saying you can put one on both of those at the same time?
Yeah, you can.
Okay.
Okay, we got part of it. I don't have here's the equal rating table, and that's exactly what you would expect. What's used is in the non-grayed out, okay? So if you pick 3 positions, equal weighting with a 1 up here, they all get a third. I can't show, we'll have to go the other. Here's the user-defined batch, where you can go put in whatever you want. And then, like I said, on this, after you run it, it will tell you the percentage of the days that each strategy was used as rank 1, 2, 3, 4, 5. So it also shows that on the rotation report, but here it gives it real quick and dirty up front. And what you can find out, and you'll see, like this one here. In this case, it never got picked number 1, got picked number 2 11% of the days, and the rest of the time it got picked kind of regular. This one here hardly ever got picked. So maybe I don't use that one. Okay, now, let's just go all the way through. These are quick. Reports. Okay, we've got this one here. Basic performance data in the left corner. And remember, this shows whatever you have selected both at the top and the bottom. Got an equity curve charts. This is your portfolio equity. It's got your drawdown displayed here. And it has the data up here. Here's where you put your name in, okay? It tells you what strategy you're using right here. Now I got to show you what I did on this one. This shows the drawdown on a daily basis, but it'll also give you the drawdown at the end if you were just looking at the end of the month, which is kind of interesting sometimes.
Where was that?
Huh?
Where was that on that?
It's actually in here twice. It's right here at the bottom of this, and then it'll show up again in the performance versus time. There's one of these with a log scale, but it won't show you percent. It has to plot dollars because you can't do percents on log scales. There's a standard old performance versus time table, which shows you what your strategy returned each month, each year, and the yearly drawdown, not the total. Got the last 1 year data. We've got some monthly stats, the monthly average, the best month, the worst month, standard deviation. In this one, it was 85% of the months were profitable. We calculate the max drawdown from the start level and when that occurred. And then on calculating the historical performance, this will fill in whatever you have data for. It'll also repeat the max drawdown at the end of the month basis and when that occurred. Okay, now remember the one up here. This gives you the max drawdown on a daily basis and when the max drawdown occurred on a daily basis. And those usually are, a lot of times, are not anywhere close to the same date. You can learn an awful lot about how things work by playing with this. Okay, we got same probability charts. There's more that were in the gizmo. Based on what you've got, the probability of being profitable in any 1 year was 99% on this one. Any 1 month was 84.8, and there's other charts. Probability of drawdowns, swing drawdowns, how big the drawdowns will be. We've got the old statistical return histogram. You can plug in the number you want for how many days. Again, these are all trading days. Now, if you're using the auto rotate, there's a whole sheet for that that gives a report showing how the strategies were picked and rotated over time. So we've got all the list up here. I'm repeating what I showed you before on the portfolio sheet. It shows when it was last picked. And then it goes down here. These two areas are basically the same. This shows the rotation date. Whoops. The rotation date, which strategy was picked. And then over here it's the same information, but it sticks your name in there. These are just gives the numbers. So what this one will do, note it's colored if the same as the prior selection. So when I go down here, okay, every time there's an orange cell, it was the same as the prior month. Here it picked 13, well here it picked 12, 3 months in a row. And it'll also, okay, it also prints out here what your allocation selection is that you have picked. Okay, there's a box that says last strategy picked. In this case, it was 10/31/17. What it picked, it shows when the next scheduled rotation date is. And then it does looks at how often these positions changed. So in this case, there were 73 rotations over this 17-year period or whatever. And the number one position changed 52% of the time. The number two changed 70. So that says, well, the number one was pretty solid, but these others are changing all over the place. Then there's some graphs that shows how things changed. We have down here the strategy number. Remember, I gotta use numbers a lot because you can't make a label with what the user can put in there easily.
I thought you could only have 5 strategies in the rotation.
That's true.
Then why do you have all those?
Down here we have the strategy number. I have 29 strategies in there.
I thought you could only have 5 that you could run.
Yeah, there's 5 of them.
5 at one time, it'll still pick through all those.
It'll pick through all of them if they're all enabled.
Oh.
So like right here, strategy 13, because it was enabled.
Okay, so it's ranking all those and then picking the top 5
Yes,
each month, and then you have the allocation of what percentage of the
Yes.
top 5 that you want. Okay, got it, okay.
So number 13 was picked the most,
yeah.
as ranked number 1, right?
I can't.
No, it is, it's blue, it's a high.
Yes, it was picked number 1 the most times.
19, you didn't even need 19 because it never got picked.
Yep, 19 never got picked. So now you have a choice with 19. Do you stop messing with it at all? Or do you want to let it run for down the road sometime when these others crap out? I think what's going in the market right now, there's going to be a lot of changes over the next 6 months.
Yeah, 19 could be a real short strategy or something.
Well, it's not in here, but it could be. So we got that chart. And then for each rankage, it shows how it changed over time. And again, we got the strategy numbers on this side. So it started out. Now, I'll have to point this out in just a sec. I better do it now before I forget. When you pull this up, a lot of times if there's not data, it's going to show the first period of time or more. It's going to show strategy number 29. What is that strategy? Cash. So if it doesn't have data or it hasn't, if you start, remember we rotate the end of the month, so there'll be a rotation potentially on 1/31. But you start your simulation at 1/15. It doesn't know what to pick, so it's going to put cash in there. So almost every time, looking at this chart, it's going to start on 29. And then over time, you know, you can see for a long period of time here, the number one position was strategy 13. And then it started, well, look at this. This is 2008 and 9 right in here. So the number one started bouncing around to different strategies. And then there's one of these for 2, 3, 4, and 5. There's a sheet, we talked about this before, where it puts the total equity curve for the portfolio for the time period that you selected on that sheet. You can copy it and use it anywhere else you want to. You may find it useful to point copy to one of the equity curve analyzers, which is kind of nice because they compare it directly to timers. You can apply a timer to this if you wish, or you can just compare it to the SPY with a timer or the aggregate bond fund. Okay.
Let me ask a question, like your other sheet that you have that does single equities, and then you can apply a timer to it. Do you have an output for that sheet so that you can apply the timer to that equity curve and then copy that?
No, the timer's built into there's.
Because you input your equity, right?
The timer's in the sheet.
Yeah, no, but the output of that would be the input for this, right? Because it would take the output
Yeah, you
from the
could.
top.
It could be.
Yeah, I was just thinking.
I might have to add that.
That might be interesting to have.
Or at least show you how to do it.
Yeah, yeah.
So do you have a list of the timers in there?
Yeah, there's two. The S&P 5200 and the 3.5 band.
Oh, you have that in this sheet?
No, it's in the other
It's
sheet.
in the other one.
The 3.5 band on the S&P,
What?
the 3.5 band on the SPY, correct?
It's actually done on the SPX,
Okay,
but it's applied to the SPY.
okay.
I don't know, we probably won't have time today, but, okay, wait a minute. I wanted to jump over and play a little bit before I go to how do I do that, skating?
Click on the Excel and click on
Okay, let's start with okay, this is a real one. Now, if you guys don't know this, with any of the Office tools, okay, if you don't want to see all this header up here, there's a little arrow here that all goes away. And then there's an arrow comes back somewhere, probably here. It's not, no, that's the formula bar. This is Windows 10, I don't know where, it might be this one.
It's under public
Yep.
review.
Okay, so here's a spreadsheet. Now, as it so happens, I have loaded, it's full of strategies that have been shown here before. So, these over here are the MTS ones. There's a couple that Dan uses and has shown before. Actually, more than that. There's one Jeff showed, stocks on the move. Here's the one, there's a couple of TTI ones. Oops.
bottom feeder's the one I showed last.
Yeah,
month.
bottom feeder's the one he showed last
6 months.
month. There's a couple of Quant Technology, a Sector Surfer one. There's a Fidelity junk one. This is one I tried to figure out, Don. I took what Bert said, traded EMA. That's what I get. I don't get his numbers, by the way. I can't get his numbers. There's one Don sent me, the portfolio visualizer one. There's another Sector Surfer bond one, a couple of Quant Trader ones, well, a bunch of them. Okay, so we've got all these.
Those will all be in the one you sent us?
Yeah,
That's on the play with.
yeah, that's the whole point, something to play with. I mean, we're not giving away anything here because there's no signals. You have no idea. I could have just called them 1, 2, 3, 4, 5. Okay, but we didn't. So here you got the performance of each strategy over the time period I have enabled.
Now, is there a sheet where all these definitions are, like there used to be in the Gizmo?
Nope. Because in the Gizmo, we had a select set of strategies that could be used. There was no flexibility for the user to input. So if you want to see the Gizmo ones, they're available on the site. And probably most of these that Dan has presented, the details are on the MTS group website.
Some of them are proprietary.
Some of them are proprietary.
And those are proprietary, but you have to buy the formulas from technical trading indicators if you want to trade those strategies.
So up here, right now I have it set for number 1, but let's briefly. Let's put on, well, these don't start till, I could go back and extend them and make them go back further, but I haven't. Let's just, for the heck of it, use the AR5. Here's the Sleeping Beauty and the Swing. It doesn't trade very often. Oops. Oops. Let's see. Now, I'm not picking on any of these, okay? I'm just... Did that turn that off? No, there it is. Put the Sector Surfer one in here. Sector Surfer ones just really look good. They're a little... And let's put this... we've got the low volatility strategy, Cliff Smith's one. Now, I'm going to show you in a minute. I can build one... Oh, never mind. Let's turn that one on. And here's a Sector Surfer. This Sector Surfer BMS5, that's the one they use when the Storm Guard goes to a bear market. We'll turn on. Just again, we're not trying to make anything good. We're just...
You got the wrong one.
No,
And this one is I got from Don. By the way, Don, if you take this, run it into the equity analyzer and apply the 3-5 timer, it does better. Just FYI. Which one did I want?
22.
Yes. Now, when I hit the update, how fast it updates depends on your processor speed. It was running 6 seconds on mine. It's going to run longer on this one.
So if we're sitting for a couple minutes, we know something wrong.
What? Well, I should...
Well, it depends on your process.
I should also tell you that the first time it runs, it's, see, here's that thing popped up. The first time it runs, it's going to be the longest run because it's set to save file size when you save it. So when you save it, it gets rid of all the calculation links. So when you open it and the first time it runs, it has to rebuild all the links. And it also takes a little longer to run after you load a bunch of data. So let's see what we got. Okay, with these, I have 5 of them enabled. I'm using equalized. I got a 31% CAR and a 12% max drawdown. Again, I'm not rotating. I'm just
equal weight?
Yeah, they're equal weighted. And they started at 20, well, I know that, yeah, and I've got a 1 month rebalance. So they start at 20% and they end at 20%. Now, you might see 22 or 23. It depends on how long the end date here is since the last rotation. Okay, watch what happens if I put 0 in there.
So you'll never rebalance
Never rebalance for
for the one.
17 years, which isn't very,
How many strategies you got?
5.
5.
Is that the most, in that one where you've got 5 on one?
Up here, you can enable all 28 of them if you want to.
But in that column where you have 5, you can only do 5 with the max?
You do.
That's down here.
Oh, that's it, okay, that's
Up here, can enable them all, okay? Notice when I enable them, they turn green. Okay, now I got 57 and 20, but this strategy here, by the end of the 18 years, hogged 99% of the funds. Is that what you want to do? Probably not. So you can play around with a rebalance period here. Let's go back to
like
one.
a year would be 12 months, right?
That's
You got
correct.
a higher CAR and a higher drawdown bonus, didn't you? I believe.
Well, effectively,
Over the whole time period of the back test, so you don't know when that would change.
Well, that strategy was so good, it made all the money.
Yeah, and you kept fit. Okay, so, okay, we got 31 and 12 with a 1 month. Let's go 6. Dan doesn't have a ton of memory, so it's also got 2 or 3 spreadsheets and a bunch of stuff open, so. Okay, so now I got 32 and 12. Didn't make a whole lot of difference. Sometimes it does, sometimes it doesn't. And it also depends on the strategies that you put in there. Now, if I,
You haven't done anything in the rebalance part.
Nope. Scroll down, there's the one chart. There's the log scale. By the way, there are some quick jump links. Here's the return versus time. 82% of the months were profitable. Worst month was 6.6%, and the maximum end of the month drawdown for this was 6.6%, but it was 12.7. You'll see typically 1.5 to 2x higher drawdown on a daily basis than you will at the end of the month. That's just, some guy from HP sent me a formula to calculate that one time, but I never could make it work, so. Okay, and then you got your various probability charts. You can enter the histogram. If you want to go to this Monte Carlo analyzer, this is what you enter right here. Oh, and down here, don't mess with that. Get below the red line. Okay, so now let's, again, you can set these by yourself. So now I want to go and turn these off. I don't know what it did. There we go. This
And
is,
then I have to close some of the other external spreadsheets.
that's working.
spreadsheet you're working on right now?
Yes,
Okay.
I think that's all I got. Okay, so that's all. Now I'm gonna go rotate and allocate. Now to do that, I have to set this one number 1. Now,
What do you have turned
What
on?
allocation scheme?
Which strategies you have turned on for?
oh, there's a whole bunch left in there. I just wanted to update it so I could see what,
So which rotation thing are you using, ROC or?
okay, I've got them all turned on, all 28 of them.
He's using ROC.
Yeah.
And you can turn on what you want, rather than messing with that. Oh, here's a good way, you can see what the progressive allocation rank, 100, 50, 50, 33, 33, oh, that's equal. 100, 70, 30, 55, 30, 15, 50, 25, 15, 10, and you can see. So if you like that, you can change it in the user. Now, I picked 5. Let's pick 1. I mean, you can play with this and you'll learn a lot.
So that's all you're gonna pick, the top rank?
Top 1. What do you think is gonna happen? You're gonna get a huge car and the drawdown will probably go up. Well, it went to 31% on the drawdown and 68 on the car.
You do that in Pinot with his position sizing, it'll do the same thing. When you change the allocations to a smaller number, his car goes up and the drawdown goes up.
That's on it.
Always does that.
Yeah, that's modern portfolio.
Okay, so let's go back. Now we'll go back 5. Okay, I like this number 2. You can play with it. I think these two guys use number 2.
Which is what, positive O?
It's, no. It's just these progressive allocation, how much money you give. Rank formula, you can play with this. Rather than take any more time, I'm not going to. Well, maybe I'll do it once. Depending on the strategy, I think Dan uses 4 and 6 here on some. And, if you go to play with this, you'll find out this doesn't make as much difference as you might think. And I like the ROC. Sometimes it doesn't do quite as well as the other two, but it's really, really, really simple. I could get those numbers right off of stockcharts.com if I wanted to. I don't have to calculate anything. I don't have to use a program if I didn't want to. Linear reg slope is a little more. You probably have to use a program or Excel, and Clino is quite a bit more complicated. So you can go play with this, put whatever Clino periods are in there. Now let's just see. Over here is where you...
There's a pop up there.
Oh,
Still there.
change the colors. Here's where you change the volatility and positive momentum. We could try it. We put a 1 in there and see what happens. Might not make any difference in this group. Jeff's machine goes like 2 seconds for this. Or most of them it does. Okay, so 35 and 11. What'd that do? It knocked the drawdown down a little bit.
What did you just change?
Changed the game a little bit.
Well, you also enabled 5 strategies. You went
No,
from
that's
one
what
to
that was
five.
before.
Did I?
Right. You changed it to five, right?
You want a five.
Changed it
Damn
to
that.
five.
Yeah, I did. Well, you're gonna have to play with it.
I mean, that's the big thing that you get out of this, is you can start playing with it. You can change, by changing the rank formula, you can find sometimes the Klenow works better than the rate of change does. Selecting positive momentum all the time helps. Every now and then, it'll work better if you don't select it. But that's kind of the whole point, is put in the strategies and just start
Yep.
plinking around with it to see what works best.
Now, you could use this in real time by putting in your strategies at the end of every month, running it again, see what you get. I had another spreadsheet, but I'm not gonna show it. I have one where I've entered the mutual funds from Cliff Smith's LVS, run it on here. I do just as well, if not better. And I actually do the better when I use only Fidelity funds. But so you can try it. Now, I can't match Cliff Smith's portfolio visualizer numbers because that's the portfolio visualizer problem.
But I got close to it, but I didn't do it, I couldn't do it high.
Yeah, I've gone into Fidelity and tried to match the funds that he had in the spread paper and matching them to Fidelity and done much better.
Yeah. Okay, so I'm gonna kill this. I'm gonna go back. I just got a few more slides in summary. How do I get that?
Right here.
This one?
When you say multiple funded accounts, not sure what you mean.
Well, let's say you have money at Schwab, Interactive Brokers, TD Ameritrade. And if you're depending on how you mix and match your strategies, you might have to move money from Schwab to TD Ameritrade every month. So you don't want to do that, probably. So I'm just saying, be careful how you do that. You can build a portfolio of portfolios. Make individual portfolios, copy on portfolio builders, and these are just different ways. One for each broker. You can logically group strategies and then build a top level. And there's, again, be careful what you do makes sense. I think it's better if you have to take advantage of the power of this, if you have more available strategies than positions, because they're going to quit working. And the idea with this is hopefully when one quits or two quit, that one or the other two will start working. So it works the best when it can replace poorer performing ones with better ones. But to do this, you need more than positions. And ideally, they work off of different principles: trend following, regression to the mean, blah, 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 whatever you want. You can export this to the MTS Equity Curve Analyzer, and there's a lot more there you can do. There's actually a second one now, Compare Two Equity Curves. So you could input the Portfolio Visualizer Cliff Smith one and the one off of this one, and compare the two side by side on the same graph, same data and everything. So that's kind of handy too. Use the Monte Carlo analyzer if you want to see what your real probabilities are. Whatever you come up with in this one, I'll guarantee you, the odds of you getting that next year are about 2%. Because this is all probabilities and statistics. But I do give you in there what
Give us the probability.
the probabilities and the statistics. So pay attention to that, not so much what's in. And lastly, garbage in's garbage out, folks. You put in crappy strategies, that's not gonna make them good. It might make them, if you got enough crappy ones, the result might be a little better than it was, but it's not gonna be good.
Have you tried this at all with just stock symbols?
You can do that. I have not tried it.